We're being joined by Mr. William Foster, the Vice President of Sovereign Risk Group at Modi's Investor Service. Thanks a lot, Mr. Foster, for joining in right in the morning. First up, FM has hiked the fiscal target for FY18 to 3.5% versus 3.2% earlier, and FY19 stands at 3.2%. What is your view on this number of the fiscal deficit? Is it on the expected lines? And what's your view at large for this kind of a number?
Sure. Our expectations were for a slight slippage from the original target, which was obviously 3.2% for this year. We had expected 3.5%, and that was largely driven by the fact that the GST collections had been slow. Obviously, implementation has been somewhat challenging. Compliance has been somewhat of an issue, and obviously the GST Council is working to try to ease that burden on SMEs and exporters, and they're making some progress. But that was the reason why we expected, some sort of slippage in addition to some increased expenditure. So we were not surprised that the slippage was to 3.5. Our expectation moving forward was that the government would continue to prioritize fiscal consolidation, both in the near term and most importantly, from a credit profile perspective in the medium term. And so we were looking for this budget to see, to get more clarity on the roadmap for that fiscal consolidation, as well as whether they would mention anything with regard to the FRBM committee recommendations on a debt to GDP target, which they did. So all in all, the budget in terms of the fiscal numbers, more or less were in line with our expectations. And moving forward, the expectation is that the government will continue to prioritize that consolidation over the medium term.
Right. Mr. Foster, that's an interesting point you make. And in fact, while everybody is bullish on it, everybody wants to know what really does it entail, what the process for fiscal consolidation will be going forward.